ETFs, man, those are the exchange traded funds, right? You've definitely heard us talk about ETFs before, but if you haven't, ETFs, when it comes down to investing, is going to be like your best friend, in my opinion, right? So one purchase equals instant diversification, right? And we kind of previously in this Wealth Wednesday talk about how important it is to diversify your portfolio, right? We talked about sector rotation. If you have a portfolio with the top 500 U.S. companies, right? And when technology is doing well, you get the benefit from that. But then when technology starts to not do so well and it rotates into the industrial sector, right, you still have industrial companies, so you still get the benefit from that, right? So it keeps your portfolio stable, right, and it's still going to grow over time. So the ETF that I like, one of them is VTI, right? This is by Vanguard Total Investment Market, I believe it stands for, something like that. But it's the entire U.S. stock market in one fund. So you got the top 500, you got the S&P 500, the top 500 companies, but then you have thousands of small cap companies, right? Smaller companies, and then it also weights the S&P 500, the tech companies a little bit different. So the same tech companies that you have into the S&P 500 will be in VTI, but there will be more invested into those tech companies in VTI, more emphasis on those tech companies in VTI. So that gives you a little bit more growth than VOO and SPY would. And that would be the S&P 500, the top 500 companies. So the difference between VOO and SPY, we look at SPY every day on the chart. The difference is only the companies who made the funds and the ETFs. So SPY is created by the company Standard & Poor, right? VOO is created by the company Vanguard. The people like Vanguard VOO a little bit more because they charge a little bit less to control it, right? SPY, they charge more than Vanguard to control the fund, which takes more out of your profits, right? So that's why people like to use VOO a little bit more. QQQ is what tracks the top 100 NASDAQ tech companies. We talked about the NAS 100. QQQ is the ETF that tracks those companies, right? So buying the ETF of QQQ, you're able to have a basket of all the top tech companies in one, right? So instead of worrying about, oh, should I buy Microsoft, Apple, Google, SpaceX, you can just buy this whole thing and own a percentage of all of them at one time. Lower risk than individual stocks, just like I just mentioned. And it's the perfect starting point for beginners. If you're somebody who's struggling, where do I start with? Flash, Go-Getter, where do I go? Man, I got all these companies in my mind. I love them all. I love Apple, Meta, Google. I don't know which one to choose. VTI, VOO, man, or QQQ. That's your way to go. Do your research. If not, join the Discord. Dollar cost averaging.
Getting into that, man, dollar cost averaging is something that everybody could utilize, and it'll change your life drastically from the moment that you begin it. Dollar cost averaging is the beginner's superpower. You can have this on, you can make investments on autopilot, and that would remove the emotion from investing. So therefore, you could have your money sitting in this account, say your bank account, and you can have one of those platforms that we use, Robinhood, SoFi, Coinbase, to take the money that you want to invest and put it into whatever you direct it to on autopilot. So therefore, you don't even need to see and oversee your trade or your investments, because you know that $20, $5, $50, $100,000 is coming out of the account every month or every week or every day, right? So while you're dollar cost averaging, you have the opportunity to buy more shares when the price is low. Because while price is dipping, you're getting in every time. You get the notification or whatever the case is. You get the opportunity to buy more shares. And then when the price is running up, right, you have the opportunity to buy fewer shares when price is high, because you've been getting in on that dip so long that you're falling. You finally hit that valley at the bottom. Right now, price is coming up. You didn't stop investing because you're making money on those returns that you invest on the way down. You're still buying, but you're not putting as much as money. You're not putting as much capital into your investment. You might be buying $200 a week, right? But now that was on the way down, but price is moving up now. So now you may be bringing down your investment to about $50, right? $100, whatever the case is. And that over time smooths out the volatility, because you've gotten in so many places on the ups and the downs that you're, instead of you being hella down in your account or hella up in your account, it stabilizes. So when over time, say you invest in 2024, 2024 prices is not 2026 prices. So if you were to be getting in and investing for 2 years, after some time, it's only growth. It's no longer, damn, I'm down 40, 50%, right? Especially investing into these ETFs, because these ETFs really ain't going down. They're really not 20,000 or 2024 prices. So that's why emphasizing on the ETFs is crucial. Individual stocks won't give you the returns that the ETF will, because you're parking your money in a basket, right? So now, it doesn't matter how much money you start with when it comes to the dollar cost averaging. You can start as with little as $5 a day up to $25 a week, right? However you want to do it, but you getting in is the most important part. So that strategy that you use, the dollar cost average, is something that you need to come up with where you're not over leveraging your account and over leveraging assets, because now you might got a little bit more than you got to spend, right? Or whatever the case is. You got to come up with that on your own. But dollar cost averaging is your best friend. That is what's going to help you outpace the market. I don't think that's the right word, but it'll help you stabilize.
Yeah,
it'll be a lot
help you
more
be
growth on the
it'll
upside.
help, yeah, and it'll help you be consistent in the market. Yep. Sorry.
Yep. Start with what you have.
Yeah. Back to what Flash was saying. Starting with what you have. So $100 invested in S&P in 2000 equals over $600 today. So if you just invested $100 in the S&P in 2000, it would have grown without you doing anything to $600 today, and that's just one share. So let's say you had $1,000 during that time and bought 10 of those shares, right? So 10 shares at $100, and you let it grow from $1,000 to $100 to over $600 today for one share. $1,000 for 10, 100.
Yeah, 6 grand.
You got $6,000. So boom, the power of investing and just holding for the long term. $25 a week would be $1,300 a year, right? Something that you can do to get $25 a week is skip one DoorDash order a week, or just sacrifice a couple nights of eating out, right? $50 a week, $2,600 in a year. All you gotta do is cut one subscription, right? 2 coffee runs, or two days of spending time with friend, or one night of not going out, whatever it is. Cut one subscription and 2 of whatever else. $100 a month, that equals to $1,200 a year. You redirect one impulse purchase a month, right? Something I can think of is, prime example, your friends is probably, if you don't got the right friends that are around you, they're more than likely asking you to go do some stuff, to go spend some money on the weekends for whatever reason, right? You can easily say no once one of those weeks, or just say, nah, I'd rather just stay in for a weekend, whatever it is, depending on what your lifestyle is, and save that $100 and just put it up in there. I used to really build the habit. I could have $50 by Friday, and I wanted to invest, and I know I wanted to invest. So I'd put my 100 so I can only have 50 for the whole damn weekend and be broke the weekend, because when it comes down to the weekend, you can't pull your money out of the stock market, right? So I would put 100 on there on Thursday, Friday, and not have no money on the weekend, just so I could remove that impulse of spending that 100, right? Sometimes you gotta do that to build that investment account. Then $5 a day, that's less than a daily Starbucks, right? Which equals $1,825 a year. Flash, what you got for us? What examples do you think you might have for all this, and anything you might want to say about this slide?
Yeah, I like the fact that we're redirecting that one impulse purchase a month. That is the best way to go about that. Definitely get this number up from 1 to at least 10, because that you want that investment account, right? You want your investments to pay you in the future. You got to redirect more than one impulse. You know what I'm saying? As well as, you're not going to Starbucks every day. You got to have those sacrifices. So what I will say is, yes, you can start with $100, but you have to be ready and willing to sacrifice something. If that isn't emphasized, I would tell you right now, you're sacrificing DoorDash. You're sacrificing the Netflix and the 2 coffee runs per week, right? You're sacrificing that weekend fun, like Official Go Getter said. You're sacrificing Starbucks eating or drinking Starbucks, eating Starbucks, whatever, every day, Bigfoot Java, right? Dutch Bros, whatever it is. You're spending less than $5 on, you're spending no money or little, sorry. You're directing your funds to investing, which could be $5 a day, instead of buying Dutch Bros, instead of going to Starbucks, Bigfoot Java, et cetera, et cetera. Now, I think the best way to go about this when it comes to finding your dollar cost average method is find a nice comfortable space where you break it down week by week. So $50 a month, that's $50 a week, 4 weeks in a month, that's $200 a month. I think that is a perfect I think that is a very beginner friendly approach to investing into the market, because you spend more than $50 on miscellaneous every day, right? Every other day. So $200 a month to your future, I think is exceptional amount of money for you to get started. Now, this is how you pick stocks and crypto.